Hello, MakerDAO community, and welcome to Know Your MIP number 14. I'm Retro from the Sustainable Ecosystem Scaling Core Unit, and today I'm joined by the CEO and CFO from CoinShares, Jean-Marie and Richard, to take a deep dive into MIP86, which is a proposal for CoinShares to introduce a Treasury Investment Program. They've prepared a short presentation as normal, but are open to taking questions throughout the talk. So as they come up, please use the question feature or the chat feature on the right-hand side of the screen to submit any questions, and we'll address them as they come up. And as always, the raise hand feature is at the bottom of the screen if you'd like to hop on the mic and have a little bit more of a deeper engagement with the team. With that, happy to pass the mic over to, I believe, Richard, who's going to kick things off for us. Maybe not.
Okay, you're the bottom. You should let go.
Guess wrong. All right, Jean-Marie, please take it away.
Rich, you going? Oh, I'm going.
You go.
All right, so hi everyone. Thanks for having us. Retro, thanks a lot for organizing this event. Your hard work is very noted, and thanks for that. My name is Jean-Marie Mognetti. I'm the CEO and co-founder of CoinShares. My background is crypto since 2013, and before that, I was doing commodity trading in various shape and form with my legacy business partners, Danny Masters and Russell Newton. So that's it for me, and I hand over to Richard, our CFO.
Hi everyone, and echo Jean-Marie's comments. Thank you for having us. My name is Richard, CFO for the CoinShares Group. Joined CoinShares around 3 years ago now. I am by background a chartered accountant, working originally in audit, then moved across into capital markets work and a lot of advisory work. And I became a nominated advisor to companies looking to list on the stock exchange, and became a qualified executive of the London Stock Exchange, advising a whole range of companies on listing. And happy to be here and happy to get a chance to speak to you guys.
Right. So before we jump a bit too quickly in our own proposal, I thought it would be a good idea to recap a little bit on CoinShares to present what is CoinShares. So CoinShares is Europe's leading full-service digital asset investment house and trading group. We are a publicly listed company in Sweden, and mainly the way to think about us is like three core business activity: our asset management solution with a revenue model which is mainly basis point on AUM, a business solution or capital market kind of desk solution, which is basis point on volume, and finally a consumer solution part of the business. All these three parts of our business, or client-focused part of our business, are all underpinned by two things: a common technology or operating system, which is called Galata. Why did we call it Galata? Because when we start our asset management business, the first piece of software we write was a piece of code allowing us to connect NASDAQ order book to Bitfinex order book, so as we can make market on our product. And the same way we were connecting the old and the new world, we were referencing to Galata, which is bridging Europe and Asia in Istanbul. And this operating system has been growing since 2014 and allowing us to do not only our asset management business, but all our capital market business into their consumer solution. So it's a growing ecosystem, a growing operating system, which has been taking a lot of space inside CoinShares, and this is driving all our decision-making process from a risk allocation to pretty much every trading decision we're doing. So that's about CoinShares in a few words, and Rich is gonna dive a bit deeper.
A little deeper. So just to give a little bit of an idea of the size of CoinShares, and also by virtue of the fact we are a listed company, there is a lot of information available about ourselves and our financials published on a regular basis. So anyone wishing to learn more about us and learning more about someone who's potentially going to have stewardship of assets, it's a very easy thing for you guys to go and look at. So as at the end of June this year, our net asset value was in excess of 220 million. We had over 2 billion of assets under management as of yesterday or a few days ago, which is comprised of a whole range of ETPs issued by two of our entities, XBT Provider and CoinShares Physical. And we also have an index. We have a material stake in a large mix of of entities that are operating within the digital asset ecosystem, inclusive of a Swiss digital bank called Flowbank. And as I think Jean-Marie alluded to at the start of the call, we have a presence in a number of jurisdictions. And just moving a little bit onto our financial results since 2017. And I'm sure Jean-Marie will like to put these in a little bit more context with market cycles, but we have been consistently profitable since 2017. Obviously, our results and our performance as a group are, of course, impacted by the wider digital asset ecosystem and digital asset prices. But, one of the things that we've managed to maintain when we look at our annual results going back to 2017 is regardless of the situation in the market, we pride ourselves in being built in such a way that we always manage to achieve profitability. And that speaks volumes to our control environment and the tech stack that we have that is, of course, relevant to the conversation that we're having today. Anything you want to add on that before I move on?
To add, in terms of market cycle, what we can observe on our financial is yes, we have kept delivering increasing top line and bottom line since 2016. We're one of the rare company in the ecosystem who managed to do that. But at the same time, we can see how 2017 and 2021 as end of year cycle are acting as, I would say, a high-end point or accelerator in our growth phase. And the years after that are always lower, but lower for clicker effect. So if you look at our H1 2021, our H1 2021 is already bigger than 2019 for the full year or bigger than 2018 or give or take. So we can see how this clicker effect is impacting us, and we are only going from high to high. So jumping a bit more into CoinShares Capital Market activity, this is where we need to dive a little bit in terms of business activity, because that's the one which is linked to DeFi. This is the one which is linked to foundation protocol and all this kind of things related to our capital market activities. So Galata today allow us to trade 24/7, 365 days a year, and have pretty much at any point in time around 400 orders in the market, both traditional and crypto market, both on the DeFi and CeFi side of the crypto market. So we have built something which is quite unique, which you probably find in another version, probably I would say maybe not as advanced at Wintermute, in a different version at Alameda. This is something we have built in-house. We didn't buy any solution outside like Talos or Elwood or anything like this. It's all built in-house, and we control as a result the full industrial pipe that we are building. This infrastructure is underpinning the offer we are able to bring towards the MakerDAO today that we're going to be able to discuss right now. So, the story between CoinShares and MakerDAO is there's a couple of points to look at which are interesting. So MakerDAO is the institutional grade protocol by excellence in a DeFi environment, which does not make himself, very, very forthcoming when it comes to be institutional already. First of all, Maker has demonstrated a long-standing expertise in DeFi with several billion of assets under management and a successful cycle. We remember when MakerDAO migrated between Ether and USDC. There was plenty of events of difficult time, which were managed very professionally by the team. Maker is one of the leading DeFi protocol as well that promote collaboration with institutions and try to bridge DeFi and TradFi, which is always something we quite like to look at. And finally, having spoken with a few people in the governance of MakerDAO, stewardship of protocol is something we are very interested in at CoinShares. There is a real open mind and idea of transparency which is permeating for the different discussion we're having. And that takes us to CoinShares. And we like to think about CoinShares as one of, maybe not the most, but at least one of the most DeFi-friendly investment firm, bridging, TradFi and DeFi and CeFi. So, we have an internal DeFi team. We have Solidity developers in-house. We have our own decentralized asset management platform in Alpha, which is being built on different protocol itself. Through our asset management business, we set up strong relationship with Avalanche, Cosmos, and many other foundations. And finally, we have been very active on lending platforms. Both have, both sides of the trade actually, whether with TrueFi, with Maple, with Clearpool, and Aave. So we have been very, very focused on how to keep pushing the envelope of what we're doing usually in DeFi or TradFi to bring it today to DeFi. And today, effectively, our proposal is a bit the reverse of that. Is like, how do we bring real world asset, or like what we do in the fixed income market, into DeFi and bridge the gaps in the other way around. Rich. All right. So our proposal. So we put this proposal down, I think early September or mid-September. The proposal we built is trying to be a bit different from everything we see, everything out there, and the key fundamental of the proposal we have is to say we would want to see the MakerDAO Foundation benefit from I would say an active rate environment and not be hostage of it. And that's why, instead of giving the MakerDAO Foundation a benchmark and say we're gonna deliver you X% or whatever, we decided to use like a common interbanking benchmark. Say, okay, this benchmark gonna adjust itself with the monetary policy and the rate policy, which is gonna be used mainly in the US, and that's going to give the MakerDAOs a much more flexibility. So our whole proposal is built around SOFR. SOFR is what's going to be replacing LIBOR by the end of the year. So it's a bit more, it's to avoid making an update, but it's kind of pretty much the same thing as LIBOR. And the idea is to be able to deliver to the foundation, at the very least, that's our hurdle rate, the performance of the SOFR benchmark. And then on top of that, there will be outperformance, and then this outperformance will be shared equally, or in a different way. Sorry, it will be shared in a different way between the foundation and CoinShares. And this sharing will take different aspects. Now, when it comes to what we're going to do, we're not going to be just buying, I would say, some treasury and just sit on it. It's a much more actively managed strategy, which allows us to buy fixed income product to deliver the performance we need to justify this kind of investment thematic. The portfolio will seek highly credit-worthy bond. There is a lot of dislocation right now in the fixed income market, which allows us to buy a lot of undervalue or under par bonds with very, very high credit rating. So we're very confident in that strategy. And then we will have a very strong mix of investment grade rating, but also making sure we have enough floater and fixed to floater rates in our book, so as we are able to deliver the, I would say, variability of the rates policy in the US and don't get hijacked by a sudden move of the FOMC. Rich, if you come back on the previous question, on the previous page, there's a question from Paper Imperium. Is there a maximum concentration for a given counterparty or issuance? There is. No, we get two questions. Sorry. So there is a concentration risk, and we will update that definitely in our MIP proposal, so as it's all there. So I don't have the number in front of me, but there was definitely a counterparty maximum exposure and an issuance maximum exposure. So we will take note of that and update it in our proposal. And then second question, your proposal states that a minimum of 70% will be investment grade. Can you talk to the credit risk of the non-investment grade investment? Yeah, it would be like everything which is not investment grade would be like of better quality than investment grade. So it would be like, government and all this kind of stuff. So it would be not, so investment grade is pretty much the lower we'll go in the investment grade thematic. But we can also precise that in our other suite of answer, David, if you're happy with that. Okay, so I'm assuming these two are answered. Okay, thanks. Okay, cool. Now we can move to proposal, the second part. So, the key here in this proposal is like, is few stuff to think. First, is discretionary. So unlike the other proposal we saw before, we are not outsourcing the management to that to anybody else, and we are not just like sitting and passing through. We are actively managing that in a discretionary manner. So it's a very, very different proposal from what we saw before. It's independent in the sense that we are not passing that as well to a BlackRock or Blackstone or anybody of this world. We are managing this book ourselves within CoinShares. So CoinShares will manage this vehicle as one of its clients and be accountable for that and manage it with the same transparency it will do for any of its other clients. And then it's active in the sense that we are not just sitting on treasury, as it was suggested earlier today. We are doing something much more, I would say, discipline, which allow us to probably get the same duration risk as treasury, but with or volatility profile as treasury, but with much better return on our investment. So it's a very, very different approach to it. And then finally, there's a professional team with that, and by professional, it means several things. First of all, there is a number of regulatory footprint across the group, which guarantee the way we are handling ourselves, whether it's in Jersey, which is in London, whether it's in Sweden. It's also a listed company, so you get the transparency of the listed company. So everything CoinShares does is very, very transparent. In less than 2 weeks' time, we're reporting our Q3 earnings. So that's something, which we're doing on a quarterly basis to give more transparency. So we're not going to disappear overnight and MakerDAO money will be gone. Everything we do is regulated in an environment which is very, very different. And then we are, a lot of other, counterparty place trust with us, whether it is other marketplace like SIG, Zitra, Euronext, but also market makers and counterparties. So we used to handle this kind of problem, and we used to do that in a professional manner. And finally, I think there is something to say about low intermediation of services and structuring, where in this kind of case, bringing a real world asset to DeFi is something we are looking at very seriously. And so as a result, part of this proposal also have a component where we try to figure out, and it's going to be work in progress, and we're not going to be able to do that in a heartbeat, but how do we learn from all our experience from our interaction with Maple, our interaction with Clearpool, our interaction with all of this other, or TrueFi, but also our RV, and how do we learn from this to say, okay, well, so how do we use the lesson of what we learn in this protocol interaction to bring some form of smart contract to MakerDAO Foundation, so as we can start interacting and branching. To some degree, it will be still free. There will still be some friction. It will not be perfect, but start branching at least and show the direction of travel, real world asset with MakerDAO community. So there is a reflection we're having internally about that and how to make it happen, so as we can create something around that.
If I could ask a quick question, Jean-Marie, you mentioned transparency, which I believe relates to the subcomponent C5 in the MIP. And there was also a call out of a real-time data explorer, if I read that correctly. Could you speak to that a little bit? The partnership with Armenia?
I think the real-time, I think you're referring to Trust Explorer, which is a solution that we implemented with a third-party firm called Armanino, who are based out of the States. And what they effectively do is they produce a daily assurance report on our digital asset holdings, which is a very powerful tool. I mean, if you look at the balance sheet of CoinShares, the vast majority of the digital assets we hold in order to collateralize or hedge the liabilities arising from the wide range of exchange traded products that we issue. And one of the things that regulators, exchanges, and holders of our products are very keen on achieving is a degree of comfort around the assets we hold and their sufficiency, and when looking at covering the liability arising for the ETPs, i.e. when they come in cash in their note, are we able to service that obligation? So one of the things we look to do in our constant kind of mission to be as transparent as we possibly can, because being transparent in the digital asset space when you're a listed company is key and a very powerful tool. We, off our own backs, implemented this solution, which relies on itself on blockchain technology to work. We implemented this daily assurance report system, and anyone can go to the Trust Explorer website, which is an independent third-party hosted website, and get a live view of our asset holdings and a daily assurance report on our asset holdings.
So just branch that 2 seconds, Retro. So if you branch on that, we can use the same interaction to create this kind of transparency with regards to this proposal. Subject to the community being happy with it, because like transparency come at the cost of everybody being aware of it, and maybe the community going to say we don't want everybody to be aware of our holding in terms of bonds market. That's something to be discussed, but that's something we can put in place very easily to bring this transparency in terms of what is in the portfolio, pretty much not in real time, but well, it could be in real time. I think subject to rich interaction with the auditors, but at the very least, it could be every end of day. And then the next step for us is, okay, well, we take this piece of kit we have from the, I would say, TradFi world, and how do we convert that into smart contract so as we can start paying, for instance, dividend through this, coupons through this mechanism, or anything like that. So how do we recreate some stream of payment and the repayment of principal and interest through this smart contract mechanism, which will be a first step towards bridging real-world asset with DeFi and with MakerDAO. So it's a work in progress again, but I think it's very important, and it's part of the kind of the journey the MakerDAO community is on. So we want to contribute to it ourselves.
Yeah, no, I think that's important context too, and knowing that it's a partnership that CoinShares and Marino has directly. Would you say that requests by the DAO could be integrated then, since it sounds like you guys are owning some of that development?
Yeah, absolutely. It would be like the technology is already in place, so they managed to do it for pretty much everything we do. So doing it for fixed income would be like, I'm not going to say it's easy because Richard's going to kill me. And you can see he's already laughing. So that's him telling me I'm going to kill you after this call. So no, so it's not going to be easy. It's going to be super easy. And we're going to be able to make it happen for MakerDAO community, subject to the community willing to see this transparency. We can make it happen.
Cool. Perfect. Appreciate that.
So just to come back, when we read all the comments at the end of the MIP, there was a lot of comments which were like, well, there has been so many requests and so many proposals that we get a bit lost about what is what. And to be fair, all these proposals are all a bit long. So trying to keep a track on everything is not always easy. I think the key story about CoinShares proposal is right now we're proposing to pay back some money to the foundation, to the MakerDAO community. We're trying to target the SOFR as our benchmark. Right now, it's around 3% or 4%. That's where we're trying to hit our benchmark, and then everything above SOFR is shared in a three-way mechanism. And I call it a three-way because it's very important to understand how it looks like in terms of economics, where basically 1/3 of the overperformance is paid back to Maker as overperformance, 1/3 is paid to CoinShares for his fees, and the last third part of it is paid to CoinShares, not in fiat, but it's paid to CoinShares in MakerDAO. So CoinShares will use that to buy MakerDAO and effectively lock it for 2 years. So we take a commitment towards the community to lock it for 2 years. It will be fully transparent and again fully verifiable. We will lock it for 2 years and use that to also participate in the stewardship of the protocol and be involved in the governance, because we do believe in this protocol governance. We do believe in the way that's the sense of the history, and we need to be able to contribute to the stewardship of this protocol. So in other way, we're kind of voting with our feet. If we look at the numbers net of everything, CoinShare, takeaway is probably 2 point. If you were to do the math today versus the portfolio, we put a little update, I think this afternoon in the MIP. On top of my head, I think CoinShare will take away on this performance 2.4% or 2.47%. Out of that, 50% will be a cash and 50% will be MakerDAO, which will be locked for 2 years. So it's a very different proposal than taking a management fees. It's a very proposal than the proposal we're doing is very simple. It's like if we don't outperform, we don't get paid. So we're kind of voting with our feet, and we also eating what we kill to some degree. But with professional investment manager, we know what we're doing, so we have no problem being able to commit to this number and commit to this rationale. But we don't expect to be paid for not delivering as a result. So that's why it has been built this way. It is built in an active management way, and it also everything is like I would say in source. There is no outsourcing of the process. We control the whole process. CoinShare, as Richard mentioned, owns 35% of a bank in Switzerland. Our banking partner can handle that part of the trading activity. It's a trading bank, so we can do all the trading there to be able to advance. We have all the custody facility as well. So whatever we need, we have everything in house to support this whole MIP. So we don't need to require external partners approval or validation from other committees which are not part of CoinShare. So we are highly comfortable that we are able to deliver on this MIP from start to finish, subject to the votes of the community, obviously. That's a little bit of I would say framework. If there is some I would say structuring aficionado on the call, I'm not planning to go through it step by step, but the idea that would be the idea. We make the framework interact with the smart contract as well, so it's more of a finished product than a starting product. But the idea that all the redemption and creation happens through the smart contract, which is controlled, where MakerDAO can create and redeem through it and deliver USDC to the SPV through the smart contract, and then CoinShare take over and branch to the real world asset. So it's a very, I would say, well documented process. The only difference between our process and a traditional process is the interaction with the smart contract, but that doesn't make it much more complicated. It just requires the right level of solidity development to make it happen, and then probably a little bit of, I would say, security audit on the smart contract, so we avoid to be in a picky situation, and that cost CoinShare, subject to the vote of MakerDAO community, will take on its own account. Well, that's kind of a repeat of what I explained a bit earlier, where we start from SOFR. SOFR is whatever is SOFR. It can be higher, it can be lower, it doesn't really matter. SOFR is a variable yield that is going to the MakerDAO Foundation or MakerDAO community, no matter what. Then the outperformance part of SOFR, and so anything above SOFR is split 1/3 for MakerDAO, 1/3 for CoinShare as revenue, and then 1/3 for CoinShare as Maker token with a 2-year vesting. So it's locked for 2 years, and we're not touching it for 2 years as a way to align ourselves with the community. The idea is not to keep it just for 2 years. The idea is to be able to start diversifying our treasury on the long term with tokens which have a real value in this ecosystem. So we do believe that MakerDAO will be one of them. I don't know what it is. So yeah, so I think it's sorry, I know this slide. So I think this slide is a bit. So this slide is just trying to explain how a proposal is a bit more transparent actually than everything else we saw so far, because a lot of the proposal we saw so far coming from MakerDAO are like, okay, here's what we're going to pay you, here's our management fees, but we don't really tell you what we're going to do with the money. And effectively, the borrower is keeping all the upside for themselves and make sure MakerDAO just make a little bit of money. In this case, we're trying to share not only a little bit of money, but both the bulk and the upside with MakerDAO. And the math we put to this afternoon in the forum were kind of a good explanation of that. So what? Sorry, it's my bad. There is no MakerDAO Foundation. It's more MakerDAO Community. It's a bad use of my language on this one. So sorry, Raphael, for referring to MakerDAO Foundation. It's more referring to MakerDAO Community. All right. So to sum up on the MIP, simple integrated proposal. Everything is done by CoinShares from start to finish, including legal and custody and banking. So that's pretty simple. Alignment of interest. MakerDAO through CoinShares revenue model are perfectly aligned. So we are making sure we are incentivized to make this a success. Then CoinShares regulated group in several jurisdictions, but we already touched on that a lot. And I think there is one point we didn't mention too much is the jurisdiction diversification of MakerDAO PSM, because we saw a lot of proposals coming out of the US, but not many coming out of Europe. And I think having a European focus, and I can go one step further, an offshore European focus proposal is very important, especially in these days where we're going to see more and more financial repression, I would say, from government and so on and so forth in the more of a real world. So having the right setup is critical so as nothing gets frozen anywhere in the world. It's transparent and light in terms of structures, and the fees are also very transparent. We want to build it as a smart contract enabled proposal. Again, it's not something which is going to be done overnight. We need to do the legal first to be able to draft the right smart contract. Otherwise, we're going to be a bit upside down. And then there is a capacity for MakerDAO community to benefit from the active interest rate environment we are within by having a variable yield and not just a fixed yield, which is basically making a very quick view on the direction of travel of the monetary and rate policy in the world. So we want to keep it open for the community to benefit from the upside. So that's about it in terms of this MIP. So I guess it's now time for more question or whatever Retro wants to do. Yeah, team, thanks for the question. We have the smart contract developers in-house. I think we even have some of them on this call who joined us earlier today. So they're probably hiding in the audience.
Yeah, and knowing that, Tim, if you have any more direct questions, the CoinShares team has been very accessible. So maybe we can convince one of them to hop on if you have a burning question. As we're waiting for a couple more questions to come in before wrapping up, I did want to jump back to subcomponents 6 and 7, which talked about the legal structure and the custodian relationship. It sounds like you're bringing a custodian that has some other deeper ties. I know that Ledger was also mentioned with that. Could you speak to that a little bit?
So one of our custody solution, which is our institutional custody solution, is a joint venture between Nomura, the Japanese investment bank, Ledger, the French security company, and CoinShares. And the reason why we build that, and it's regulated as a custodian, but the custodian not only for digital asset, but also for physical asset. And the reason why we build that is not because we're crazy about joint venture and love to make it complicated for ourselves, but it's more because we realized two things. In 2017, we have at the top of the first bull market. I think we're managing 1.3 billion. At the top of the bull market in 2021, we're managing 6.5 billion. So that there is some kind of exponential growth in that itself. Now, what we knew very well there is like we're not going to be able to manage this money like you manage it yourself on a Ledger Nano or on a MetaMask under your bed. Like there's going to need to be some process and policy which need to be defined extremely well, so as our investors feel comfortable, so as our regulators feel happy with what we're doing, so as our auditors, which Rich speak with on a daily basis, feel comfortable with what we're doing. And so as more importantly, we don't get inundated by Twitter and journalistic questions, because the biggest problem in this industry I don't know if it's the biggest problem or the best problem. It's like everything is very fast moving, and Twitter is a medium of communication which you can't control. So if something starts going wrong, the amplification methodology through social media is extremely fast. So we wanted to preempt all that by creating this custody solution and be able to build something which was institutional grade for our clients, which are our ETPs and asset management clients, but also from other clients which just want to say, well, we want an institutional grade ready solution. And as an example, to give you an idea of institutional ready, and it's public knowledge, so I'm not betraying any secret, but Komainu, which is the name of the custodian, which is symbolizing the lion dog keeping the temple in Japan. So you can see the influence of Nomura there. Wins a public tender that was the last public tender from a Majesty government before Brexit. So it was a European tender to secure digital assets for the UK Gov, and more precisely for the Home Office. And Komainu win that because against Coinbase, there was many other company in this tender, but because Komainu was the one with all the kind of bells and whistle that I would say an institutional grade client want to see in this kind of tender. Oh, I think that's a question for Rich.
The first part is definitely for me in relation to the Armanino solution. So the reports that they issue, the assurance reports that they issue, are once a day, but the dashboard that you will see, it updates for live prices, both for the liability and the asset side, but the actual quantum of the assets held will only be updated on a daily basis. So as we close out a day at 4:30, the number of coin or instruments that offer us exposure to the underlying digital asset will be updated, and then for the next 24 hours, it'll be impacted by live price movement for a pricing feed. So it moves in real time, but the level of assets we actually hold is updated once a day. I think the second part is probably more for you, Jean-Marie.
Oh yeah, thank you for the hot potato here. Okay, so far EIP Pro, EI Pro. So far is a kind of new version of LIBOR. LIBOR has been victim of a lot of scandal before, and I think I'm not an expert in the reason the scandal happened, but I think a lot of the problem was because the methodology was data input driven, and it was not like so this LIBOR is being abandoned as the rate of reference for the overnight market as soon as at the end of the year. I think we're already late on the calendar, but it was supposed to be abandoned at the end of 2021 already. And we're migrating to SOFR, and SOFR is a kind of the competitor or the rate which is taking over from LIBOR, which is effectively a broadened measure of the former LIBOR, which is more data-driven and asset gathering driven than just input taking. So instead of like taking input, it just go outside and like measure stuff independently. So it's supposed to be a better measure of the repo market. And all of the questions. Sir, can you go over the slow allocation of what do you mean? No, I think the slow allocation of fund was not about no, we're not worried about the recession or about anything. We can allocate faster. I think the idea to deploy the fund in a, I would say, slow with a triple O, quadruple O manner was a way to demonstrate to the community our capacity to do it, and not to have you feel hostage of a company who can perform. So it was more, yeah, that's exactly what I'm saying. So it was more for us to be able to, show the community that we can do what we say we're doing, and say what we're doing, and be able to say, okay, guys, we can work more together, or you're not happy with us. So it was more like the way. It was more to give the community a way to get out or to feel happy with us, and to feel more comfortable deploying assets with us, because, as I said a lot, you often date before getting married. and that's a little bit a way to start to keep dating and making sure we can do stuff, and the community build trust further and beyond within CoinShare, which is built on demonstrable outcome, not just words in a forum. So that's the reason why.
Yeah, I think that brings up another good segue to subcomponent 4 of your MIP, which talks about being able to make the funds liquid within 7 days during normal market conditions, or 14 business days due to volatile market conditions. Can you speak to that subcomponent at all?
Yeah, look, ultimately, we can go out extremely quickly. We're trying to invest in low duration, liquid asset, make sure we can get and benefit from market dislocation. However, the price of speed, speed as a price, and the price of speed is like people are waiting for you on the other side. So what we're trying to do is say, okay, we want to keep it as liquid as possible. We can definitely get out in 7 days. We have no issue with that. But like, you never know what the market condition can be. If you look at last week, and you just look at the CLO market last week in the UK, when you get this DLI happening, it's kind of a complete or LDI, sorry, happening. It's a complete mess in terms of like, the fixed income market behave in ways where people who have been in this market for 20, 30 years are like, what is happening? So it's not something you want to be hostage of, and you want to be able to be patient in that case and not to be forced out, because that would be damaging for the community. So we just want to make sure we have the liberty to exercise best discretion, so as we can give, in case of a urgent need, we can still make sure we deliver our fiduciary duty and protect your asset as best as possible.
Got it. Yeah, it definitely makes sense. Well, while we're waiting for any straggler questions to come in, I'm going to attempt to do a screen share here. Doesn't look like I can, since the other PowerPoint's still being shared, but just want to bring up that the RFC freeze is November 2nd. So that is about 2 weeks before the proposal becomes locked in order to make any other changes to the MIP. So the timing of the call is very good, as the community has more questions that we want to make sure is addressed. The timeline for both the proposal submitters as well as the community is about 2 weeks, until Wednesday, November 2nd, to get those comments in. Does look like we have a follow-up from El Progreso that says, assuming so far is 4% in 2023, can you go for these terms, forward-looking statements with several numbers listed there?
I think what might be, what might be useful is just to put a bit of context around the calculations that we talked about in theory. I mean, there's nothing preventing us from doing a few example scenarios and feeding them back to the community, saying, if SOFR is at this and moves to this, and what does that mean for both the community, ourselves, in terms of numbers. We can happily run a couple of scenarios and feed them back, so you can get a bit of.
I think I understand what EI Pro is saying. So I can't work. First of all, we're not doing any forward-looking statement. That's not what we're doing. We have a portfolio which is right now yielding on a yield to maturity 6.6. I don't have it in front of me, but 6 point something %. We just updated the number this afternoon before this call. This is a yield to maturity with 1.2 years of duration. So we are comfortable we can hold that right now. The market tomorrow can be very different, but like, that's a portfolio if we're to deploy right now, we can deploy this for 1.2 years of maturity. So now, with that being said, out of this 6.72%, if we were to split it according to our methodology, based on where it's so far around 4% now, MakerDAO community will get 4%, and then out of the 2.47% left. No, that's not correct. It was like, let me look at the math we sent earlier.
Yeah, Frank also had a clarifying follow-up question that basically says, can you go over the breakdown of the $500 million investment and the 3/3 split?
yeah, let me just try to see if I find this email we sent earlier today, because it was easier. So assuming let's forget about how much money is deployed, because it's all in points. So assuming 3.04% of SOFR right now, our portfolio is able to generate a yield to maturity of 6.75. Okay. So 3.04 is for, so what the Maker Foundation, oh, sorry, that's my tongue tweaking again. So what the Maker community is making out of that is 3.04% plus 1/3 of 6.75 minus 3.04. So a grand total of 4.28% is what will be theoretically allocated for the Maker community out of the 6.75. The difference being 2.47. This 2.47 will be split in two pools for CoinShare. One pool being a pool of Maker DAO, that we will buy some Maker effectively in the market and log this Maker for 2 years in a very transparent manner. And the other half will be effective, which is basically 1.235, will be used to compensate CoinShare for its portfolio management effort. I think that's helping, or at least clarifying.
Some fast math and a lot of numbers. But yeah, Frank follows up and says yes.
But like, we're very happy to put an update spreadsheet to explain again and be transparent one more time with it.
I think going over them on the call definitely helps. As a reminder, the recording of this call will also be made available on the call announcement post, and we'll share it with your team as well, CoinShares, to distribute however you need. Tim did ask for some spreadsheets to be included in a follow-up. The best place for that will probably be in the MIPS comment section for MIP86. What's the best way to get a hold of you guys then for any follow-ups? Is it through that forum post, or are there other channels that you would like to share with us now?
Forum post is fine. We are monitoring it. We have a policy where, well, in the past, we try to gather all the comments and answer once a week to avoid losing all the answer and trying to keep it consistent. Since we are closer to the log date, we're probably going to start answering also faster and have probably a 48 hours turnover grouping on all the proposals, so on all the answers, so we can update the proposal in real time. And otherwise, Twitter, I'm on Twitter, so you can follow me, you can hit me, you can DM me, or everything is open. So feel free to send your comments. And Richard is in Jersey, so you can come and see Richard in Jersey.
Any questions via the forums definitely best, because I think for this kind of thing to work correctly, we want everyone to see our answers. So chances are, if someone's asking a question, someone else is going to be thinking of the same thing, but may not go around to asking it. So I think it's good to have them all in the same place.
Perfect. So we'll keep the MIP comments to the forum, and then Jean-Marie, what's that Twitter handle real quick, just so we have it?
JMMOGNETTI. So JM Mognetti.
Perfect. We'll make sure that's included in the show notes. But want to thank the audience here for their time today. I'll give you guys the final words to close this out then.
Yeah, well, look, we're very excited about that. We're very happy to work with the Maker community, and we're very happy to have been able to work with you, Retro. Thank you very much for organizing all that. Your effort as part of the community are well noted and very useful. So thanks a lot for that, and also thanks to all the people who have been very supportive of this process and give us a lot of feedback through the different steps. And some of them make the comments public, some of them email us directly, and for all the ones who have been helpful, either privately or publicly, thank you very much. And we look forward to the votes and the process.
Awesome. Well, thank you guys for coming on. I think as you demonstrated on the call, governance is a learning process, and you guys are quick learners for catching the foundation slip of the tongue. But as always, keep up to date with everything at forum.makerdao.com, and we'll see you around the metaverse. Take care.
Take care.